Good day, fellow investors. Now that lithium is not like oversold, now it is the time to look at lithium. Not a year and a half ago when it was extremely expensive and everyone was excited about it. Let's take a look at batteries and Livent stock. If you look at the stock, so this was the time of exuberance, now it is down, it has started rebounding a little bit, so it is a good time to take a look at this. By the way, this is what I do on my research platform, so check it out. This company will be added to the covered stocks list, and I want to increase my circle of competence by looking at lithium, which is a commodity and fits me well. Now, there on the platform there are other 4 good stocks to buy now, so check the research platform. Let's now discuss the business but also the lithium sector to see what is the general risk and reward of investing, the general trend, and what is the likely outcome. If we look at the company, so they are doing their lithium hydroxide, carbonate, butyllithium, standard things that these companies do. They are selling to energy storage, polymers, also greases, but that will also change over time as these companies, especially over the last few years, are significantly growing. You can pause here, read a little bit about the past of the company. The key factor is low-cost resources, and as you have low-cost commodity producers, you don't really care about the volatility of the environment. You always make money, which is a positive. Plus, if you can expand on those situations, even better. And they are also expanding by merging and diversifying their production with Allkem, and the merger of equals, as they say it. If we look at Allkem traded on the Australian stock exchange, the market cap now is 7 billion, so what is it, 4 or 5 billion of US dollars, and if they merge, they will increase their production, plus both companies have investments for growth. And the situation is that this 1 billion in EBITDA, as the companies have their projects, might be free over time. 3 billion in EBITDA times 10, that's 30 billion. If we merge the current market caps, we are at 7. So this is a potential 4x investment at this point in time. This will be now the new company, so diversified from production to processing and then selling what they have to sell. This is the plan for the companies, so huge growth there going forward, 3x over the next 4 or 5 years. If profits follow in a good year, you know the results there. This is report how they are going to value, so it's actually going to be Allkem going forward because they will get 56% of the situation. They say there will be capex savings, run rate savings, so given the vertical integration of the companies, this could also happen. Timetable, they should close pretty soon, so as a bigger company, it might get also more traction, so it is also an interesting time to buy now, but we'll see that more in the risk and reward. They will be called Arcadium Lithium stock, I think, new name, and there will also be a new ticker on the New York Stock Exchange, so things will change, but there are also risks. One of the risks is Toyota, that is always doing something else. The more things are moving into one direction, the less likely is that the world will switch to something else, even if it might be more interesting or no. But these are new technologies, and you never know with new technologies. Maybe someone invents something that really works, even if there is physics also that play a part, but you never know. That's the key when it comes to these investments. So also when you think about portfolio exposure, what you can take, you have to think about the potential unknowns that are there. But anyway, they will have growth, production, carbonate, hydroxide, hard rock production, and they plan to grow that. This is just Livent from their proposition. They have these mines in Argentina, and the new president, things are looking better there, but that is always and will always be Argentina, so you can always expect taxes when they replace this president with a new one of the different kind. That's how it goes there. So that is also a risk here. I personally will learn more over time. They are expanding and expanding because they are expecting huge growth in the market. But that is again always a risk, because yes, there might be growth over the long term, but maybe we'll have a recession next year in Europe, and there will be much less demand for electric cars. Companies will buy less, save on these extravagant things, and that is also something that might create differences in that expected supply and demand, and also opportunities for us investors. And you can see here the ups and downs of lithium. Of course, average prices were extremely high in 2022 as everyone was buying from cars to electric scooters, whatever. But the average, I think the company is projecting, is somewhere here. Of course, long-term contracts, so they didn't take advantage of this, as this doesn't impact them that much, as they are more concerned about delivering the product to the producers of batteries and cars. And you can see here on the Chinese stock exchange how lithium exploded, and now it is back to more normal things. But when it comes to commodity investing, you need to watch supply and demand. It is a cycle, the cost curve. When prices are high, everyone is investing. That leads to oversupply when few will invest, and that is the name of the game. Of course, there is government support. Now we had this conference in China supporting removal from fossil fuels, so that is a benefit for lithium too. And these are the trends that we are seeing around there, and yes, this is how it's going for now, and therefore very positive for the company. Of course, we don't know how will these trends work. Will be fast adoption, slow adoption? Will it be 15%, 12%, or 20% growth going forward? We will see over time, but if you have a low-cost production rate, then you will make less, more, or extremely more money. So increased demand for hydroxide, carbonate, whatever there, we cannot precisely know, but for now the current market conditions are supply chain destocking, as we have seen with FMC at battery level cell in China, which is pushing prices lower, but the long term should be okay. Let's see how this long term impacts the financial of the company. The combined company should be looking going forward, but let's try to estimate a little bit what's going on. This is just for Livent. We need to combine the companies, but those are similar. The EBITDA is there, 500 million, so what to expect going forward? Additional cash flow generation to invest in new capacity, higher realized pricing on existing multi-year customer contracts, because customers want to be sure that they get this material. As they grow, you can see here, EBITDA 1.1 billion on these long-term contracts. With growth, this could be 3 billion over time, and then you have it. 3 billion as the cycle goes, so there will be in the future also ups and downs. The thing with the cyclical is to buy when it's cheap and sell when it is expensive. Plus the market doesn't like it. Even Piper Sandler cut to sell now, so when the price was high it was a buy, now when the price is low it was a sell. It is a sell. Well, that's why analysts are not Warren Buffett. Now, you can pause here and read from the conference call. I've gotten this from Seeking Alpha. If you want to read those conference calls, you can check Seeking Alpha on the link in the description below. But if you look at these things, you can understand that the lithium price slide has accelerated over the last few months, and reading this transcript or listening to it is very interesting to know what's going on. Also, this from investment bankers, there won't be any significant rebound in the pricing environment for at least the next few quarters, and therefore they say it is a sell. But we as investors don't think as analysts to the next few quarters, we think longer term. More from this analyst that the contracts, long-term contracts, so will be good for Albemarle and Livent. Over time, we might, as we dig in deeper into the sector, also analyze other players, subscribe for that or follow, and this is typical going on with the cycle. Back to going to the transcript, the chief financial officer said they expect higher average prices given their contracts than 2022, but they also expect lower costs because their inputs are also lower, so even in a weaker environment they will make money. The CEO says that the prices moved lower during the third quarter, but that there is the underlying demand and supply data points where they don't see strong evidence that either is meaningfully different than the scenarios they have previously expected. On the demand side, we can see that customer buying activity for lithium was weaker, but long-term installations are still up and demand is likely to be positive in the long term. On the supply side, this is normal with mining. There is always issues when it comes to building mines, developing, getting the permits for everything. So it's never as expected, which means the price of lithium will likely go up and down, especially higher costs for non-integrated operators, unlike these two companies. And the underlying long-term end market is remaining strong, and therefore they discuss their long-term contracts there. And the key takeaway from the CEO is that the current market doesn't reflect equilibrium supply and demand conditions for lithium, which means higher prices, which means higher than current EBITDA for the company. The trends are there, and if lithium is the battery of the future and we go to an electrification in the future, Livent should do well. There were some interesting questions on where are the prices going, what will drive the most value for shareholders, their contracts. So it's always a lot that you can get from this transcript about the company, but also about the market. They will be selling meaningfully higher volumes next year. That will lead to higher cash flows on the contracts that will then be reinvested for the future while maintaining a healthy balance sheet, and they do have a healthy balance sheet. They still, despite the lower prices, continue to be about 50% EBITDA margin, which is best in class, low cost resource base. So a very, very interesting situation. And now the merger with Allkem should further improve that. Prices of 40-50 a kilo per lithium is too much, but pricing below 20 cannot be rationalized. So prices will likely be somewhere in between, and we can then say somewhere between 20 and 25, which is the standard pricing also for contracts that they have, and therefore very interesting, very profitable company going forward. And if we look at the long-term liabilities, they have just 250 million in debt, which is what they invested this year in new production. So I don't think there is a debt risk, unlike the former parent company, FMC. I also need to analyze the Australian company to see a little bit more, but for now it's very interesting. I still sense a recession in Europe going forward next year, which should then put more pressure as people will not be spending their money on batteries crazily, but the long-term trend is there. And we can see here new chemicals company, as I said, in the next exuberant cycle that might be 5-7 years down the road, 3 years down the road, this can be a 5 to 10x company from current levels. I'll be adding this to my stock risk platform, Write It Up. It will be on free preview so that you can also see how I follow a sector. I think that lithium will be very interesting for me to research into, but also for you. So thanks for watching. We'll keep discussing lithium stocks here on the channel. Subscribe, check my platform, and I'll see you in the next video.